Welcome to my strategy series. In these videos, we look at quick ways to analyze the markets. In this video, we're going to be looking at when to short and when to long. So I've gone ahead and removed all the levels from the past videos just to clean up our charts a bit. And I've marked out what could be the range inside of this chart. So back here, we last left off with a 15-minute level that was getting held, and we're going to remark that just so people who haven't seen the past video have been able to keep up. I've changed the color to pink just to represent what could be the very bottom of this move or the bottom of the range. So whenever you're identifying whether you should be doing longs or short, you should look at the overarching picture on the higher time frames, and you should define a range of possibilities. So kind of the maximum point it could go before breaking into the next part of the move. For example, up here, this would be the very top of the daily range. This distribution candle here led to this big dump. So if you were going to break this level, well, the next likely level you'd go after is all the way up here. You would probably break this daily level, and all these levels that it had been fighting. Now that this is the final piece of the move, it would likely break up to the next untested region, which is up here. So between this and this lies a large gap in the trade, therefore making this kind of the final moment. If you were to say, hey, this was the very bottom, it needs to come all the way up here. You've defined, while this may be pretty big, you've defined kind of the area. And then you can work time frame down and say, hey, anything on the 4 hour? No, it's very much the same thing on the 4 hour. Rather, you would start marking out your hold levels, and then you'd go to the 1 hour and you can say, hey, is there anything on the 1 hour? And you actually do. You have the next part of the move that would give you where you're going and what might end up being a great short target. So if you are longing, you'd want to be longing right now for the reasons we spoke about in the previous videos. You've already tested your level back here. You've had a move down. You've hit your hold levels and laddered the move. So you've created a ladder from here to here to here. And now you're creating this next piece of the ladder, which is right here. And that got created off of hitting this hold level. Well, this would be a great place to long because it's very much the bottom of the move. You don't really have any hold levels left underneath it that are continuing to hold up this move, rather than it going and back attacking something like a reverse level. And if you've watched Butterfly Effect, you know what a reverse level is. If you haven't, a quick TLDR is it's a level that was wicked through in the past and can act as support in the future to ladder the next part of the move. By logic, if you went through the level, you could just go back and retest it, creating the next ladder point, which would give you a trend. So just a quick TLDR, what a reverse level is, go through a level, you can attack it again in the future because it can still create trend off of that level and ladder points. So in this trade, when we're looking at this, we've got the perfect candidate for a long. We've got a trend that was just created. We've got a hold level that's being hit. At the very bottom of that, we're right just slightly hovering above the actual ladder point. So it's kind of using a combination of all of these things to say, hey, this is a great long. You would never short this level though. You would never go into these charts and say, hey, this could break the move. Let me short this level once it starts breaking, because the simple fact is that what happens when you short a level like this is that you may be here on a 15-minute time frame and you have a 15-minute hold. And you may try to short this level because it looks like it's breaking on a really small time frame. You're sitting here and you're like, oh my God, you know, this level's hard closing on the 5-minute chart and it's breaking down. But the simple fact is that it still has larger time frames that it can stay above. What may look like breaking down on the 5-minute actually doesn't hard close on the 15 and then just creates the next perfect candidate for your next ladder point in this trade. You would just simply have this as a hold level going forward in the future. You can delete this because this one was already held, and therefore it gives you the next great opportunity for a long position. And if this breaks, then you're likely going to move down. Rather, instead of trying to short this move, because I know a lot of people have this strategy where they say, hey, I'm going to long here, and when it starts to break, let me short. You will always get into a mess by doing that for this exact reason. It moves down, you've longed it, you exit a long, you open a short because you think it's breaking down. The short ends up going the opposite way, goes back long, you were in a long, you close your short or you take the loss, and then it just becomes a big mess. You're just constantly bleeding profits on guessing trades. Instead, couldn't you just go to the opposite level and say, hey, here's the hold level on the other side, the inverse hold level. We'll talk about inverses in the future, but the opposing hold level. And you'd want to short that if you think this is going to break down here. So you're never going to short something that acts as long support. Even if it's breaking down, you're going to wait for it to go and test that moment where this can hold it down and it can just break it from there, reducing your risk down to zero. So when you're looking for these quick analyzes in the markets and you're looking for these quick tricks, you should long when you have a combination of things working together. When you have trends, hold levels, and ladder points all working together at the same time, they become very safe targets that are highly controllable, and they're going to break down much further. They're going to give you a way earlier sign that they're breaking down, something like this, where it hits a inverse level and it's saying, hey, I can't regain my move up and I'm still moving down off these inverse levels. And the alternative would be true on the other side. when you're looking for short targets, you should look for parts of these moves that can continuously hold it down. So a good example of that would be if I were to draw this on my chart, I could say, hey, here's a level here, but I actually think it's only going to reach this right here because maybe there's like a 5-minute level here. Let's go and check. Okay, so this was actually already tested as a 5-minute level. So perfect. We already have a tested part of this move. This was kind of not tested, which also falls under this right here. And then you have this right here. So I would mark both of these levels and say, okay, well, let's go take a look at what could actually be a trade, because this right here could be the level and it's kind of the same thing as this. So if we go back to our hourly chart, we now see a spot where if you were to simply move up in this trade, let's get this off. Oh, and see, actually, this was the perfect spot to actually take that trade. And it acts as the trend probably from back here. Now that I've seen this, I actually hadn't seen this one prior, but this is great because it actually acts as your trend from back here on the chart. So now you have a trend from here, and then you have your further trend moving in the future like this. So then you have that, then you have this architecture here, and you're starting to build the architecture of your chart. So like a really cool thing that you could do now is you have no 4-hour candles. So that's great. So you only have to worry about using your hourly candle here. So now you could say, well, if we go up here, let's get that brush tool back. If we go up here, we now have a great target, which is this. This acts as a great short target. Instead of trying to wait for where you should short after this trend is breaking, the problem with shorting this level is it's already breaking the trend. So unless there's some kind of major rejection, you're just going to get yourself into trouble on this trade, because what's going to happen is like this. Imagine this trade comes all the way out here. It hits trend, and this trend either has to pull it back or it has to move it forward. So this trend is going to move it forward. It's going to hit this level and pull back. The problem is you're hard closing over top of this trend, confirming that you're breaking out of the trend. So what's going to happen is you're going to hit this level that's developed off the backside there. You're going to bounce off this level, and what may seem like a great short target as you're about to fail trend actually just sits long enough above it, and it confirms like a 1 or a 4-hour hard close and then moves up like in a crazy quick way. So then you have a very nice, easy, and clear way to say, hey, here's a trend, here's my range, this is what I should be doing. I should be longing down here because it's combining all these theories. And then you should find the same thing on this side of the chart. And you should say, well, where's a level that hasn't been tested yet that stays below this trend? Well, it's not this one, that's already tested. And it's not this one, that's already tested. So maybe we should move down in time frames and see, hey, is there anything else here? Let's take a look. 15-minute, nope. This one could act as a reverse level, but I don't feel comfortable with that. Let's keep it simple for this example. What about a 5-minute? Do we have anything up here in the higher parts of this move that are a 5-minute that are untested? This one's tested. This one's not. So what about this? So if you were to go back into a larger time frame and just kind of zoom out, well, what would happen if you came to this chart all the way out here and you came to this moment here and you said, hey, here's my level and here's my trend working together in unison? Well, this would make for a great short target. And if you wanted to relong it, you'd wait till this rejects. It holds some kind of level that it developed back here, right here. And then you could either long here or short here, but you would never long the breaking of this trend. You would be longing what's attacking that trend before it happens. So this is a great way to look at where you should short and where you should long. You should find the points and moments that control the larger hierarchies of the chart, the larger meta of what's happening in the markets. And you should find the levels that combine with other theories to ultimately give it more strength, trend mixed with a hold level and ladder points. Well, I wonder, could that not just then say, hey, I ladder from here to here to here to here and now to here? Yes, it could. So this would essentially be the exact same thing. And you would have almost a perfect trade by saying, hey, I've got a hold level that's untested. I've got a trend that it's close enough to this hold level that they can both support the move up. And I've got a ladder point, which can now confirm 3 things that would actually hold this move down. And then you've got a great short opportunity. And on the opposite side, a great long opportunity on the bottom. See you on the next one. Cheers.